You may have heard that investing in stocks is an excellent way to accumulate wealth over time. That is absolutely true. But do you understand how the stock market works? What is the difference between stock market, stock exchange, and stock index? Do you even know what a stock is? You are not alone if you have replied no to any of these questions. But there is nothing to worry about. In today's video, I will be sharing with you the basics of stock markets, stock exchanges, and stock indexes. Let's dive in. Before we proceed, here are a few fundamentals to assist new investors like you in understanding how the stock market operates. What is a stock? Stocks are also known as equities. They are essentially small percentage ownership of companies that choose to make their stock available to the general public. For example, when you acquire a Tesla stock, you are purchasing a small piece of the firm and a piece of the company's success. Comment below if you want to invest in Tesla, or if you'd rather invest in something else. In other words, rather than being owned by a single person or a small group of people, some businesses choose to become public. Anyone can buy shares in these public companies and become a part owner. These shares are stocks. Stock market basics. Fortunately, you don't have to delve too deep into it, and just having a basic understanding of how it works will be enough to get you started. If you wish to buy Microsoft stock, go to your broker's website and click the buy button. You're buying stock from another investor, not from Microsoft. You become an investor in the underlying company when you purchase shares or stocks. How are prices determined on the stock market? Stock prices on exchanges are dictated by supply and demand. At every time, there is a maximum price that someone is willing to pay for a stock, and a minimum price for which they are willing to sell the stock. These are referred to as bid and ask prices. Consider stock market trading to be similar to an auction. Bidding is always going on for equities that other investors are eager to sell. If investors are acquiring stocks faster than sellers want to sell them, it shows that there is a lot of demand for that stock. This may cause prices to rise. On the other hand, if more people were selling rather than acquiring stocks, then the price would fall. What happens when you buy a stock? Buying and selling stocks must be done through a broker. A broker is an entity that has been granted permission to trade stocks on a stock exchange. A broker could be a real person to whom you give instructions on what to buy and sell. There are also AI brokers, such as TD Ameritrade or Fidelity, who handle the entire transaction electronically over the internet. Here's how it works when you buy a stock in a simplified version. You tell your broker what stock you want to buy, and how many shares you want to buy or input electronically. Once your broker communicates your order to the exchange, a market maker offers you shares at the current market price. After that, the shares are delivered to your account. It's as simple as that. You know, making money is not that hard, and I can show you how you can easily make money in this masterclass I've got for you. Check out the link in the description below. How does a stock index track the stock market? You've probably heard phrases like the market is up or a stock outperformed the market. When talking about the stock market, it's common to refer to the market as a stock index. The S&P 500 and the Dow Jones Industrial Average are stock indexes that indicate the performance of a big group of stocks or a certain sector. Indexes are a useful way to get a rough estimate of what's going on in the market. It's crucial to remember that the major stock indexes you see on TV and in the news don't fully represent the stock market. Stock markets, stock exchanges, and stock indexes. Three terminologies are used here, all of which have similar and frequently misinterpreted meanings. The act of investors buying and selling stocks with one another is referred to as a stock market. The New York Stock Exchange, for example, is a stock exchange that acts as a middleman between buyers and sellers. A stock index is a numerical representation of a set of equities that may be used to track their performance collectively. Comment below if you understand stock market, stock exchange, and stock index a bit better now. Understanding the stock market's fundamentals can help you become a better investor. You'll also realize that the market functions as an auction, with pricing determined by supply and demand rather than the underlying business fundamentals. And you can take advantage of that to make a lot of money. Now there's another secret that's super powerful that'll help you make more money online in just minutes. In fact, the video that you're seeing the screen right now will show you exactly that. Check this video right here, and you'll thank yourself later. See you there.